Hello, and you're very welcome to this episode of the podcast. And in this episode, we're going to be looking at something called financial master planning. And it sounds really boring, but it is really, really interesting. And we're going to talk about the benefits of what a master plan is. We're going to understand where it applies in your life. We're also going to talk about three big questions, which we like to talk about with our clients the whole time. Where are you now? Where are you trying to get to? And how can we help you get there? And when you answer those three questions, it doesn't matter where you are in your journey. The questions are always applicable. And then we're going to develop these questions out, and we're going to look at tax smart strategies. We're going to look at what is a plan and the benefits of having a plan and the consequences of not having a plan. So I hope you enjoyed the episode, and we will talk to you very, very soon. Thank you. Benefits of having a financial master plan in place. And why is a business owner would even care about this? Is it really something that is going to affect me? And is it really something that can help me achieve whatever I'm trying to achieve? So what I want to look at firstly is, as a business owner, who are the people that surround you in your life that you need to interact with to run your business? As an entrepreneur, there's a whole lot of things you need to do. And it's not just the art of what you're actually service or product you're delivering. It's all these other things that make a business owner an entrepreneur. And what are those things that you need to align with? So look at this as a scene. So first of all, from a financial perspective, you need to have a bookkeeper. So a bookkeeper is nearly always one of the most trusted advisors that a business owner will have. Then you need to have an accountant. So the accountant then takes the work of the bookkeeper and does the compliance and the financial reporting and tax compliance for you as a business owner. You need a tax advisor. You know, anybody that's surrounding you, you need to have that tax advisor in place. And that tax advisor should work in conjunction with all of the other people that are surrounding in your life. Then you need to have a financial planner, somebody that can put in place the plans that you have to help you create wealth and to make sure you're connected and you have things necessarily in place. You have somebody that you need to deal with the corporate finance within your organization. I know you're going through and you're saying, oh my God, I didn't know I need to deal. But you're dealing with all these people on a regular basis. And all these people are giving you their advice from their perspective. And what I'm trying to do here with this is I'm trying to get it from your perspective, not from anybody else's. So now between all of those then, so those are all financial people that you have around you. You also will have a solicitor, and you will also will have a banker. So all these people are coming to you with bits of information that you have to collate in your own head and in your own plan to make sure that that's applicable for you in your life. And you're leaning towards the bookkeeper, the accountant as a trusted advisor, you're leaning towards all these individual people. And it's their story on your implication, the application of your plan. And you're trying to say, who do I really believe here? And who here is pulling all this together? So the job that we do here is the way we work with it is this financial master plan. It's like the drawing when you're building a house. It's the plan in place. So that plan should incorporate everybody else's area of expertise, and the financial aspects of that should be built into this plan. So the benefits, and if you're assessing the benefits of what do you have, the very, very first thing you will have is you'll have clarity and direction. Do not underestimate the power of having a clear roadmap for financial decisions. And when you take all of those people that you have to deal with in your life, and you align all those people together, who's the person that's aligning all of those business operations and financial goals together for you? So just think about this now. I have to deal with all these people, and I still have to run a business, and I still have to collect the money, and I still have to get everything done within the business. But I don't know where I'm actually going because I'm not sitting down and planning. So clarity and direction is the very first benefit. Goal achievement. You ask anybody, and you've done it yourself in any area of your life, if you have a goal that you want to achieve, it's only an idea until you write it down and put a plan in place. So this does assist with setting and achieving both short-term and long-term goals. And it connects the financials with the story. And that's what it's all about. And the real thing is, grand having all these plans, but do you have the actual cash to do this work? So you don't know. Do you have the budget in place to say, well, it's great somebody telling me I need to do this, that, and the other, but I still have to make wages at the end of the week. So if you don't have this plan, you're the last person you'll pay. And I have seen that time and time again, and every single area of a life. I've seen it that, people pay themselves last a lot of the time, especially when businesses come under a little bit of pressure. So the next benefit of this is risk management. So we talked about managing risk in your business and in your life, but if you really don't assess what the risks are applicable to you, I'm not saying it doesn't matter what you do in your life. The art of what you do will have its own specific risks, but the actual overall risk is where we need to make sure, and that there's no massive event that happens that stops everything in its tracks, like illness or death or sickness or time out of work or accident or something with your business or your personal life. And God forbid they happen, but they do happen. And ignoring the risk and not doing anything about it, your job as a family member and as a business owner, that's your job, and you have to take responsibility for that. So understanding what you need based on your own financial position, whether it's insurance or whatever contingency plans are in place, or if something happens to you, is there somebody else able to step in? If you're in partnership or a shareholder with somebody else, are you happy to work with that person's, whoever that's closest to that person, and they get their shares? So now you're in business with that person. So some of these things are appropriate and some of them are not. But understanding the risk management has to be done. Tax efficiency. There's so much being tax smart. There's so many tax smart things you can do. All the real wealthy people have a tax plan in place, and it becomes a really active working document, and you really need to have that. It will improve your financial health, and that is the other huge, huge area. And it helps with cash management. It helps with profitability. It goes back to the leadership and that fusion leadership we talked about the last time. It's one of this, like it's an inclusivity plan. So it includes everything that you need to have within your life. And the last thing, and it should not be underestimated either, is peace of mind. It reduces stress and anxiety. If you have a structured plan in place and it's shared with the people that matter, then you don't have to have these questions when you wake up in the middle of the night and you go, oh, I haven't that done. I must do that. A question I ask everybody, and it's a question I'm asking all you listeners out here today that are listening to this. Have you made a will? It's a really good question. Is the will tax efficient? Another really, really good question. And the answer I usually get is, well, no good sentence ever starts with or well. The answer to this is either yes or no. It's the same as a financial master plan. But part of a financial master plan is ensuring that you do put a will in place and that you do have that there. Those are the different benefits of this. But let's just look from one side to the other, and let's look at the difference between having one and not having one. So if you have a financial master plan in place, this is going to lead to a lot more organisation in your finances. You will have a clear understanding of where you are financially, and you'll have a clear understanding of where you are with regards to wealth management, and you'll be able to be a lot more proactive. You will be a lot more goal orientated because you're looking at this plan on a regular basis. So you're seeing, do you have to shift the plane a little bit left or right to make sure you stay on course? You will be tax optimized, and just that alone, the benefits of being tax smart will have a huge benefit at the other end of your plan. There's a lot more efficiency in the resources that you have. So you now have a guide and you have a destination and you have a point into the future that you're trying to achieve or trying to get to. So when you have those in place and in front of you, now you have a plan in place, you have a destination to get to, and then all the people around you that you're talking to. Now when you're talking to all these individual people that you need to deal with, you're bringing them back to your plan and saying, well, is this my plan? And then something changes in your plan and the plan can be changed. But at least it's changed on your plan and it's not their opinion, it's your own opinion. And you will be able to make a lot more data-driven, informed decision-making. If you want to do something, you know whether you can afford it today. That's the whole part of this. You will be able to say, yes, no, I can do this, I can't do this, or this is outside my plan. And people without a financial master plan and that don't have this in place usually have the following things. They're very unclear goals. They really don't know. They're working from day to day and year to year, and they go in and sit down at the end of a year and they ask, how much tax have I to pay, without any real guidance or any real thing. And it's done in arrears, and you can't really influence that. A lot of times their finances are a lot more disorganized, and it's usually disorganized in a personal capacity as opposed to being disorganized in a business capacity. You will see people with a really well-organized business and a really disorganized personal financial life. You will have a lot more high risk, and you will be exposed to a lot more risk, because when you don't know what the risk is, there's a lot higher exposure. So you are a lot more vulnerable to emergencies and risk. You will have a lot of tax inefficiencies because a lot of times there's tax credits and they're use them or lose them. And in this instance, if you're putting money into, say, a pension fund and you're starting a lot earlier, you're getting this roll up of an investment over the years. And the power of doing that vastly outweighs the power of not doing it. Again, inefficient use of resource management, resources and missed opportunities for growth. And it's all this thing of being stressed and uncertain. Oh yeah, I must do that. I know I should do that. I'm going to do that. That's on my plan. It's been on my goals every year for the last 25 years, but now the time has passed and I didn't do it. So now I'm too late. And you're never too late to have a plan. No matter where you are on the stage of this journey, your life will be improved by having a plan. So again, personal, business owner, financial, combination of it all together, this starts to bring everything together into one overall structured, organized, positive situation. And if you're in debt and you say, well, I'm in a lot of debt, I shouldn't have this. This is even more important to have it, because at least you're going to start discussing on a plan of how to get out of this. So that's the other massive assistance with it. Wherever you are in the journey, please start planning and start consideration and thinking of how you can do this plan. What we want to talk about now is understanding financial master planning and understanding why this differs somewhat from financial plan. And there is a difference, and there is a very, very significant difference. So when I'm talking about financial master plan, what I'm talking about is I'm talking about telling your life story using numbers. And we always start, again, as we say all through these podcasts, with the family first. So we sit down with you as a family and as a business owner, and we start mapping out where you are on your journey. So it doesn't matter what stage of the journey you're at, because this is always relevant to whatever stages. And there is a number of very, very distinct stages in financial master planning. And if you start out with financial master planning and you're on the very start of your journey here, you're going to be looking at one of two things. You're going to be looking at building up income and money for, say, to buy your first car. That's usually the first major purchase for a young person. You're then going to be looking at saving to get a flat or an apartment or to move out of your home. You're then going to be looking at potentially going to college and creating savings for that, or maybe that's been helped out at home for that. Next big financial decision you're going to be looking at is you're going to be getting a job and getting your first full-time job and building and starting out in your career. You're then going to be looking at the possibility of getting a mortgage and getting your own first home, whether it's building or whatever way you're going to do, but you're going to buy your first own home, and then you're going to have this major financial thing called a mortgage. We then start looking at having a family, and that creates this other section of this thing where you're having a family, and how do you look after the family from a financial aspect. So we're starting to tell that story and put your current situation and wrap the financial numbers around there. We're then looking at starting to build out wealth and create a pension, and we're looking at risk management. And each stage of that journey has its own version of risk management. And what I'm talking about risk management in this area is, are you properly covered if something happens to you? Can you continue to work if you lose your job? Can you continue to financially care for your family? And what happens if you get sick? A lot of people don't consider this, but if you get sick, how do you actually handle that and have you the income to obviously survive while you are sick? And even worse, what happens if you pass away through illness or an accident or something? Is your family being looked after when you're there? So these are the risk management you're looking at. Again, telling the financial story of your journey as you go along. We then go into a little bit of the working life, and we're looking at what we can do in that working life to create wealth, to build savings, to help your children with college, to help them get their own foot on life and start going. And you're looking at what you're trying to achieve. And this is the accumulation phase. And understanding what that accumulation phase for you and your families is a critical, important characteristic of financial master planning. Then we're looking at potentially retirement and selling your business and moving to the next stage of selling your business and moving to your retirement stages. And there's two stages in retirement that we like to talk about. There's this active retirement where you're after finishing your working life and you're moving into that active retirement, and what income do you need in that active retirement? How much income do you actually need to live that active retirement the way you want it? And then we look at planning for later life. So the master planning looks at a full spectrum of your whole life. And when you look at that full whole spectrum of your life, what we do is how much income, savings, everything that you need to live that life the way you want to live it. Because it's not our journey, it's your journey. And what we're trying to do here is help you understand that. And the key components of that would be budgeting, saving, investing, risk management, tax planning, retirement planning. And what we like to say is that there's a thing, so we sit down and plan with you. We have all the rules are the same for everybody. So as we plan with you is to put the rules, the full extent of your life, and plan your life using the rules that are there and taking advantage of the things you can do now that will massively impact you at a later stage in your life, whatever that is. So that's what a financial master plan looks like. And whereas a lot of people just do a basic financial plan and might look at budgeting at the start of the year, for the year, but we're stepping back and we're looking at the lifetime of it. So that master planning looks at your complete life's journey. And how that differs from one to the other is it's the freedom in your own mind that you have a plan in place. That's some of the biggest benefits we see out of this. Well, I know I have a plan. I mightn't be on the journey. I mightn't be where I want to be on that plan, but at least I have a plan. And it's something that I can look at, and it's something that I can analyze, and it's something that I can use on a regular basis. So the plan should be a coherent, full plan, and then it's used regularly to keep you on the path or the journey. If you're flying in an airplane, it never flies in a straight line. It always flies 1 or 2 or a number of degrees off course. And what we're saying is we have the flight path where we know the flight path for you based on your personal situation, whereas it's accessible to everybody. Yours is different, and it's yours we're interested in, and it's yours we want you to have in place. Because that's, again, going back to our previous episodes and looking at health, wealth and relationships, this is a huge part of this. So this is just understanding what it is. So I hope you enjoy this. We'll talk a little bit further into the next section of this. Okay, so we've now talked about the discussions on the benefits of having a plan and what is a master plan. So how do you start to do this? So if you were here at this stage and you're saying, I think I'd like to do this, and you're sitting down and how do you begin the process of this? And it begins the same way every time. And it's the same 3 questions you ask everybody. Where are you now on your journey? Where are you trying to get to? And how can you get there? 3 big questions, but it encompasses everything you're trying to do. So where are you now means that from a personal and a business capacity, there are 2 separate areas of the one plan. So personally, you have to sit down and you have to do a financial audit on yourself. And you have to do that on a personal capacity. So you have to start by just listing all of your assets and all of your liabilities. And things that you have as an asset are, you have your family home as an asset. Now, people will argue whether this is an asset, a real asset or not, but it is my concern for this exercise, your family home is a massive asset to you. And so what do you do there? So you list down the value. You just say to yourself, well, I believe houses of my type in a particular area are worth this much money, and we need to look at then when you bought the house and what you bought it for. So that's the starting off on the asset. And then if you have a mortgage against that, you actually look at the mortgage and you step back and you say, well, your house will be worth more than your mortgage, which means you'll be having an improving your asset, your house will be worth less. So it's one way or the other. So you start listing all those assets. How much have you got in the bank account? Have you got any savings? Have you got any other assets? Do you have a pension plan? Do you have anything else that be construed an asset? If you sell it, you can gain value from it, as in artwork or a second home or a rental property or whatever else you have. You list all of those on one side, and then you list all of your liabilities on the other side. And this is a snapshot. We call it a balance sheet. It can be called things like a statement of your own personal affairs, all of those things. But it's a snapshot of your position today in your life. Now, that could change tomorrow, because if you make another payment off your mortgage, your mortgage has gone down. So it's an immediate snapshot of your assets and liabilities. And then we look currently at your income and your expenditure. So how much money have you got coming into your home? And how much money have you got going out? And usually then people will say, well, I don't like taking money from my company because, I want to make sure I have it there in case of an emergency or an asset. And in a way, it doesn't matter a whole lot where the money is, but the idea of the tax planning means that there might be a tax planning reason to take the money out of your company. So there are discussions, but where are you on that journey? Do you have enough income to cover your expenses and build a savings plan? Conducting that financial audit is a very powerful and, eye-opening thing to do. The next thing is you just look at where are you going? And when I'm talking about where you're going, what's the destination? So what do you believe your business is worth today? A lot of people say it's not worth anything. Some people say it's worth millions. But having a basic understanding of the value of your business today, then that's one major asset in your lifestyle. So where are you going in using that asset? How can you use the value in your business at a later stage in life? And if you think your business today is worth 100,000 and you want it to be worth 500,000, there's a gap there of 400,000. We need to figure out a way of closing that gap with you and helping you on the journey to how do you close that gap to get the value of 500,000? Because it's a hidden asset in your business that people don't look at till it's too late in their life. And there is ways of improving the value of your business. So that's another huge asset. So understanding that, how much do you want to retire on? So you want to retire, and do you want to maintain your current lifestyle? So on a really, really simple, basic, and often a much aligned way of looking at this, if you retire at 65 and you want to live to 85, you have 20 years to cover off, and you want to have a certain amount of money. Do you know what I mean? It's 50,000 a year. It's very easy. 20 times 50,000 gives you the amount of money you need to retire on. Now, that's too basic in the essence because it doesn't take into account things like inflation. But it starts you thinking in your own mind is, if I'm earning, X amount today and I want to retire and I want to have this amount, what do I need to do to start building that? And it's done in a lot of ways. It's not done with just one thing called pensions, but pensions form a good part of it. It's also done with other investment that you're looking at. So that's huge. And that gives you an idea where you're trying to go to. So then how can you get there is the third major point of this. So how can I get to where I want to get to? So now I know where I am. I have an idea of the destination, and it's a rough draft. And now I just need to start developing a strategy to implement a plan, to create a plan, and then implement a plan to start figuring out how that strategy goes. And it's like everything else. Like, you can't do a marathon by going out without doing, the long runs and the short runs. You need to really be doing all of that to figure out, to help you do this. So how can you get there? You just start developing a financial master plan that will help you on that journey. And those three particular areas of, where are you now, where are you trying to get to, and how can you actually get there? The implementation of the plan is another stage of this, but you need to have something. And people will look at this, and then you look back again in a couple of years' time and say, well, I was really off on that plan. That's okay. The start position is all we're trying to get to. We're trying to get you, you have your three-legged stool, as we talked about previously. We're trying to get you off the stool and at the starting point of the race. So when you get to the starting point of the race, we can change course as we go along. That's not a problem. Again, it's all about little baby steps to build a 1% improvement model. So those three big questions are something that you really need to consider, and that we can help you on the journey with those questions for your particular situation or where you are in your life. And to summarize, the journey starts, and we talked about the last time, the stages of the journey means you're at the start, and you're the start out stage where you're building your home, getting your mortgage, starting your family. You're at the wealth accumulation phase where you're starting to build money and build income, build value. And then you're going to the next stage of that, which is the retirement stage, which creates the active life, and then you have the later life retirement. And the other things we will talk shortly about here is tax smart strategies for that. But in the meantime, it's just getting clear in your head the journey, the stages, the questions, and the benefits. And then we'll start seriously getting into the implementation of this. I want to talk about being tax smart and using strategies in your personal and business life to take advantages of what you can do within a tax plan. And this is where personal and business start to come together. And this is where you're moving a little bit from the family into the business, and you're interconnecting the plan for tax within the business and in the personal life. The first thing really to do is understand wherever you're based and what your location is, but understanding the tax obligations. This is crucial for business owners and families in Ireland, the UK, and in fact all around the world. Having efficient tax planning, this can significantly reduce your tax liability. And you need to be able to identify what areas you can be smart in. And this is about strategic tax planning. It's about structure. It's about not looking at the short-term cash flow gain, but looking at the long-term cash flow gain, looking at the power of where you invest your income and your money and how you do it in ways that are efficient. And this covers all tax headings. So a couple of things I'm just going to talk about here briefly of how to be tax smart when you're planning. The first thing is identify the tax bracket. Like, what are the different tax brackets and what are the different tax headings that affect you both as a personal and business? So as a director or a business owner, and is there different things you can do in each of those areas? And yes, obviously there's different. How you take income from your business has a tax implication, and how you use that income and where you use that income and what you use that income for is something that you also need to consider. The other thing is maximizing tax deductions, tax credits, expenses, and things you're legitimately allowed to set off against your business, and understanding that that tax planning is quite legitimate and needs to be done, again, bearing in mind the type of business you do, what you do, how you do it, and really and truly use all the deductions. Because a lot of people, some of these deductions, if you don't use them, you lose them. The second or the third thing I want to talk about in this is taking advantage of tax credits. So there's a lot of tax credits out there that people are not using because they're not aware of what's available to them in their business. Things such as R&D tax credits and things such as pension planning, things such as running certain expenses to do with your business through your business, and you're actually paying them privately. So understanding that an expense wholly necessary and exclusively for the use of your business can be paid for by your business. So taking advantage of all the tax credits and all the things that you can do within that. The next little tip I want to talk about is using tax-efficient savings accounts. Now, in the UK, there's a lot of things. There's ISAs and there's pensions. In Ireland, there's pensions. So it's what in your jurisdiction are the tax-efficient savings that you can make, and how do you do it and where do you make them? And again, this is about building the plan, and it's our job to show you what's available to you in your personal circumstances. The next thing is leveraging pension contributions. These can offer significant tax relief. And a lot of people, or some people, don't like pensions because they say, oh yeah, sure, you never make money in pensions and all that. There's two separate things we're looking at here. One is the tax efficiency of using a pension as part of your overall financial master planning. The second thing on this is how do you invest your money? And they're two distinctive, clearly different things, right? The tax advantages, no one can argue with that. How you invest your money is a totally different thing. And you need to be understanding your risk profiling and your investment strategy. That's why they're mixing apples and oranges to a certain extent here. So you can have a company pension in Ireland or the UK, and you can have a personal pension. And in times you can have a mixture of both. So what can you really do to leverage pension contributions? And the thing that as you invest the money in your pension, the gross roll-up of that, what I mean by the profit is made on that pension is not taxable until you decide at the point in time where it's being withdrawn. So when you withdraw the money, that's where the tax implications come. So what is the amount of money in your jurisdiction that you can put into a pension to get tax relief on? And again, we're looking back at the three questions. Where are you now? Where are you trying to get to? And how can you get there? So at what stage and what amount should pensions form part of your wealth management strategy? And it should form part of it. We also need to understand planning for capital gains tax. Now, capital gains tax is when you sell an asset, you have a tax liability on that asset. So what and in what circumstances can you plan to reduce your capital gains tax? Another one is inheritance tax planning. Now, we asked previously, have you made a will? The second part of that question, is your will tax efficient? And different jurisdictional places have different rules to do with inheritance tax planning. And what inheritance tax planning is It's used to preserve wealth for future generations. You can use things like trusts, lifetime gifts. You can use tax planning strategies. You can have policies to cover the cost of the inheritance tax. But first of all, what we have to do is understand where you are in terms of your jurisdiction. Understand that if you have assets in multiple countries, so if you're working in different countries, this has a huge implication on your tax planning, because you need to consider the inheritance tax planning in the country where the asset lies as well, depending on your resident domicile, but you have to consider that. So creating a will is one thing, but creating the will that's tax efficient. And the master plan, what the master plan does is ask these questions and puts it into a position where you can see at this point in time, have you an issue surrounding this, or how can you work with a tax planner to mitigate the liability that comes with inheritance tax planning. And then the last thing I want to talk about here on this particular section is staying updated on tax law changes. Tax law changes frequently and regularly. And in Ireland and the UK, there's a new there's a budget out every year, and there is probably in a lot of countries in the world. This budget has a tax implication, and that tax implication has a knock-on implication to you in your personal master planning. So how does the budget changes, or how does changes in tax laws affect you? So you need to ensure that you're both compliant with tax changes, but you also need to ensure that you're optimizing your tax planning strategies. Again, let's think about what we're talking about. We're talking about the initial stage of creating the plan, and then as we go along, optimizing the plan for what you're trying to do within your own personal circumstance. And the things out of this are that I would ask you to consider. One of the top tips to consider in this is, have you made a will, and is your will tax efficient? Even if you do that alone as this part of an exercise, it is really, really important. Now we want to look at what are the conclusions and key learnings and takeaways from this episode. So first of all, what have we learned? We have learned about the importance of having a financial master plan in the first place. And a financial master plan provides comprehensive blueprint for achieving both personal and business financial goals. It helps aligning various aspects of your finance, from budgeting to investing, to ensuring you have this cohesive and overall strategic approach to how you look at your financial area of your life. We talked about the benefits of having a financial master plan, and the benefits are clarity and direction, a clear roadmap. We looked at achieving goals. By having a plan, you're a lot more likely to achieve the goals that you're setting for yourself. We then talked about risk management and identifying and mitigating potential risks that are financial risks. We then looked at tax efficiency and being tax smart, and how to maximize tax deductions and credits to reduce overall tax liabilities and enhance the cash you have available to invest. And this also talked about just the peace of mind in having a plan. And that's another thing on your list as a business owner. When you're looking, and we talked about all the people that you have to deal with, this one plan is the center point for everything. So the peace of mind and the reduction of stress. We looked at the consequences of not having a plan, which is disorganized financial life, lack of clarity and control over your finance, the missed opportunity, which is a big one, and the failure to capitalize on tax benefits and investment opportunities. The higher risk exposure by not understanding what your actual risks are, increased vulnerability to financial risks, and having that emergency fund built up. This stress and uncertainty, and then you think you know what you're doing, and you're listening to people talking about what they're doing, and you don't have it in place, and there's just uncertainty around that. So this financial uncertainty, it leads to stress, but it also leads to reactive decision making. So you hear something from someone, you say, that's a good idea, I'm going to do that, I'm going to invest in this. And then insufficient resource use. So you don't know where you should be spending your time, and you don't know how to, just management of your overall resources. We then looked at tax smart strategies. What is being tax smart? And it's the understanding the tax obligations and leveraging them to have efficient planning and significantly reduce your tax liabilities. Using the master plan helps in identifying these tax saving opportunities and integrating the personal and the business. And that's where we really started just bringing the two of them together. And now it's time to look at the business planning as well as the personal. But this thing is building those together. We then just talked about how powerful a tool a master plan is. So this kind of assists us with, start of us, we're answering the three questions. The next thing, we're creating this plan. Then we're implementing the plan. Then we're looking at monitoring this on a regular basis. And it just gives us this visualization and the map that here's our plan. We'll change it as we need it, but at version 1 of this plan is going to look a lot different than version 20. But at least we have version 1 to drive us towards version 20. And then we talked about what's the number one takeaway. And that's that a well-structured financial master plan will help you with your financial health, but it will give you peace of mind. And then just by integrating all aspects of finances, both personal, business, tax planning, risk management, helps you stay organized and be proactive. So you can actively achieve these goals, reduce stress, and ensure the long-term stability and success of not just your business, but also your personal financial planning. So I hope you enjoyed this episode, and I really look forward to continuing this and going through the next episode, which is so chat to you very, very soon. Thank you.